Welcome back to Genomics. We stick with the European theme this week and invite a different kind of player, an insurer with nearly 500 billion euros to manage. Joining me now is Mr. Alexander Wynaendts, the chairman of the board of Aegon NV. Mr. Wynaendts, the key worry in India these days is not so much our own inflation, but the situation in Europe. As someone from the continent, can you begin by telling us if you really share the sense of relief, even euphoria, in the past 1 week? Actually, if you count the deficits of Greece and Spain and Italy and the cash required to capitalize banks, it still looks like a very tall sum, and Germany hasn't quite even agreed to leveraging the EFSF.
Well, what I think is important in general is that there is a very clear commitment and also a sign of commitment from the authorities that they will address the issues. And one of the ways which has been on the table is to increase the overall size of the ESF fund, either directly or through leveraging. In particular, I think the leveraging is more a practical point of view, but I believe that the European authorities need to give an unambiguous signal that they intend to stand for the European sector, and that will, in my view, require an increase in the ESF fund.
So, Mr. Wynaendts, do you still see a Greek default as a possibility? How will it unravel if it happens? Is there likely to be something disruptive?
Well, it is of course a very complicated situation. It is a situation which is both economic but also political situation. It is a discussion not only about Greece but about the coherence of the system in Europe. And I believe that the most important point here is that there needs to be a clear view from the European leaders as to what steps need to be taken and a clear implementation of these steps. I believe it's the unclarity which can be seen as a lack of taking a decision, which at this point in time is affecting the markets. In Greece, the situation is clearly very difficult, and I personally believe that the way forward would be an ordinary default of Greece. Effectively, that is what the markets already are pricing in and are anticipating, but it's very important that it's done in an orderly way so that we do not see that this affects other southern European countries.
Will private investors like banks and insurers have to take a haircut in the debt of other sovereigns as well, like say Spain and Italy?
I believe that in the situation where we are today, it is not on the table. I think there's very clear differences between all the European countries, and I understand that from India, you might see European countries and southern European countries as one group, but I can tell you that there are very big differences, and I believe also that the countries Spain and Italy, they have much less of a problem as Greece has, and there's at this point in time absolutely no reason to believe that they should be defaulting.
Mr. Wynaendts, banks and insurers will be holding much of this debt. Do you see a big contraction for the European financial institutions as they mark to market their portfolios?
As you rightly point out, the fact that the bonds in these countries have now lost market value has had an impact on the financial sector. Banks have been particularly hit. In our case of Aegon, we are fortunate that we have had hardly any exposure. We had a very limited exposure to these countries, and as such we will not be directly affected. But what we don't know, and that's of course the question everybody is very concerned about, is what are the secondary degree consequences or even third degree consequences of a default of Greece and potentially the impacts on the financial sector. It is clear that certain banks have more exposure than other banks, but effectively it is one system. So if one part within one system is affected, it will affect the entire system and will as such also affect the insurance sector.
The world is prepared for a slowdown in US, Europe and even China. But will things be a lot worse than what the markets are preparing for? I mean, one still sees bouts of euphoria. Should the markets actually price in recession in some continents?
I believe that if the European crisis does not get resolved shortly, and if there's no clarity as to where we're going, then we will see a more marked slowdown in Europe. And a more marked slowdown in Europe will have an impact on the US, it will have an impact on Asia. However, I believe that the impact on the US and Asia will be more limited than what we will see be happening in Europe.
In the slightly longer term, Mr. Wynaendts, do you think any country will walk out of the euro or even be sent out?
No, I personally believe that it is very unlikely that any country would exit the euro. And the reason being simple: first of all, you cannot ask a country to leave the euro. And secondly, probably more importantly, the euro is very positive for all the countries which have been participating, including the countries which are suffering right now, as well as the countries who are the stronger economies in Europe. I think it's clear that for Greece, exiting the euro would have very significant consequences, very lasting consequences on the whole financial system, while at the same time this would lead to a stronger euro, and that would be working against the competitive position of the European countries like Germany or Holland, which clearly have benefited from a 1 euro. So I believe that it's not in anybody's interest to see a number of countries or one country leaving the euro, and therefore I don't expect this to happen. What I do expect to happen is that the debt of Greece will be restructured, and will be restructured to such a level that they are able to repay the remaining debt.
Well, finally, what's your idea of the 3 best asset classes in the world now?
Well, as an insurance company, for us what is most important is to have safety. And that's why you will see that we have a very strong capital position. We have additional buffers in this very uncertain time. And it also means that we are investing our assets in a careful way. So we have allocated quite some assets to German and Dutch government bonds as well as US Treasuries, while at the same time we see also attractive opportunities in the credit market, the corporate bond market, where companies have shown in the last years, in particular in Europe but also in the US, to strengthen their balance sheet. These are companies which are resilient in a time of a crisis, in particular like utilities. So these are the sectors we'll be focusing on, but we effectively only invest in fixed income securities, and therefore we will not be looking at equities or commodities, because that does not fit our asset liability strategy, and it also does not fit our risk profile.
Well, Mr. Wynaendts, I'm afraid we'll have to leave it at that. Thank you very much for joining us. Well, you heard a trader and a longer-term investor in the continent. There certainly is a sense of relief, even optimism. Let's see whether the next few weeks and months live up to that sense of optimism. That's it on Indianomics. Thanks for watching.